Good morning, everyone. I'm Gaurav from InCred Equities. For major part of the week, in the last 4 5 days, we witnessed Nifty gaining grounds, gaining momentum, gaining strength. However, on Friday, there was good amount of profit booking that was seen. Both Nifty and Bank Nifty. Nifty was down 200 points. With this, Nifty has attempted to retest the gap area. uh, you know Whether it will fill the gap or it will take support and bounce again, it will be interesting to see. There are two aspects to the gap theory. Many times people have this fallacy that gaps has to be filled, every gap has to be filled. That is not the case. I have told this earlier also, that there are certain runaway gaps, there are exhaustion gaps. So exhaustion gaps are generally one that get filled, right? What is exhaustion gap in a very small nutshell? When the market run ups a lot, after that it witnesses a gap up opening and again moves up higher on back of bearish divergence or lack of momentum, just one or two stocks taking the prices higher, or in terms of stock prices, for no reason it goes higher. You're not seeing any sort of volumes. There are no supporting indicators or parameters. It corrects and tries to fill the gap. That gaps, those kind of gaps, exhaustion gaps, those get filled the first. Runaway gaps, Nifty or any stock is trading in a consolidation, it runs up a lot, it witnesses a gap up and then runs up a lot. So it doesn't come to fill those gaps. So the point I'm trying to make is not all the gaps get filled. These are not runaway gaps also. These are not exhaustion gaps also. These are in between. It can get filled. Even if it gets filled, we're talking about another 150 points fall from here. Once that happens, we may see again a spike sort of coming in. As I mentioned in the weekly bulletin last time also, that for first time after correcting from 25,500, we are seeing Nifty giving an hourly close above the Ichimoku cloud. That again is a positive sign. So till the time it does not give a close again below the cloud area, it is going to be positive. Whether we should be trading, I don't recommend that. For the simple reason that GIFT Nifty is pointing towards 130 points start as we speak. So in all likelihood, we'll open on a positive note or rather gap up note. If 25,000 is sustained, we may see more momentum sort of coming up. If you look at US markets, they have also turned positive. It was a very strong session. Interestingly, uh, Fed Chairman Jerome Powell has now mentioned or rather increased the odds of a rate cut going forward, and his stance has also changed. And that was again in sync with what we discussed in the weekly bulletin last time, that the US 2 year bond yield suggests that there is a possibility of a rate cut coming in. So it has been moving in line with expectations, and that resulted in a strong push for the US indices. Dow Jones looks the best among the three, whether you talk about S&P 500, which is my favorite, Dow Jones, which generally I avoid, and Nasdaq. For now, Nasdaq and S&P 500 have done already well, but Dow Jones has seen a fresh breakout. If the current levels are sustained, we may see a very strong and robust upside coming in Dow Jones, which in turn can give push to Nifty index as well. Apart from that, the other factors, whether we talk about precious metals, currencies, I've been saying time and again, they have not been anti-equities, so we may see a push sort of coming in. Mid caps and small caps are giving mixed signals. Mid caps retested the strong breakout area. They run up quite decently. Now we are seeing some time correction, some profit booking. On the other hand, small cap index is again reversing from a critical area. If it witnesses more downside, the pressure will mount going forward. So there are mixed signals. Mid caps can still outperform. Large caps are doing well. One by one, different large caps are coming in, showing strong patterns. That's a sign for a long-term strong uptrend. That will from my side. Thank you.
Investments in securities market are a subject to market risk. Read all the related documents carefully before investing.